I'm Ryan Jackson, and the rent is due. Well, what's going on in the market now and what's the business looking like? I'll tell you this, it's getting bumpy. This is a player's market. The folks that were just patty caking, playing tippy-toeing through the tulips, the doctors, the lawyers, the W-2 folks, they're gone. So that market resistance has fallen, and that's also dropped the price of real estate. They've done so by design. What they did is they raised the interest rates, they raised the interest rates, and they raised the interest rates. I believe they've raised the interest rates 12 or 13 times now. Don't quote me on that, I think it's 12. And what that's doing is it's pushing up the cost of money, which is bringing down the ability to get money or the ability to want money because the debt costs so much. I mean, think about this. If you go to buy a house, you got to pay all this interest. Well, you can't afford the payment anymore. So how do you offset the payment? You have to either bring a bunch of money to put down. You're going to have to negotiate the property value down. A lot of people are not buying properties because of this. So since people are not buying properties because of this, they're just sitting on market. I mean, I've got properties that are sitting on market right now that are ready to go. We just keep reducing the prices, trying to get to that sweet spot where somebody can actually afford or want to afford these properties. I wouldn't say it's necessarily killing the industry, but it's definitely putting some drama on the industry, if you will. With these interest rates slowing us down, what that does in turn is we're gonna have to start laying off paint crews. We're gonna have to start laying off our electricians, laying off our plumbers, because we don't have any work for them because the cost of money has gone up, that nobody wants to buy our products. So why would we go ahead and buy something that doesn't make sense? We're having to adjust our numbers to keep these people employed and keep them working. Unfortunately, it's not fun going into talk to Mr. and Mrs. Seller that, hey, we can only offer you this these days versus what you were getting probably in 2021 or 2020 when the market was sizzling hot. I wrote an offer the other day in Grand Prairie for $117,500, and the sellers weren't happy about it, but they took it. We also put one under contract in Garland for $150, and probably back in 2021, probably would have went for like $210. So we're having to come in and we're having to hedge against the future, okay, because we're expecting interest rates to continue to climb, or we're expecting the economy to continue to digress. So with the economy digressing, money's not moving as fast. There's not as many people taking loans. As of the other day, I actually had a talk with my banker, and I asked him, I said, hey man, what's my rate? What's today's rate? And he goes, 9.05, and which is on a 20-year 5-in-1 adjustable commercial loan. Knowing that I'm gonna have to pay 9% or 9.05%, I really have to come down on my prices so that way I can afford it. Not only do I want to be able to afford it, but I need these properties to cash flow a little bit. I'm not getting greedy right now. I mean, we're not hitting these $400, $500, $600 cash flow deals anymore when we're paying to maybe even 9.5%. We're actually having to buy them a lot cheaper. We're having to put more money into it, so it takes money out of our bank accounts, which takes it away from our painters, takes it away from our tile guy, takes it away from everybody that's in the downline here. With the market continuing to digress, we just continually have to offer at a lower and lower rate as time progresses. We're speculating on the next 6 months because we're taking 6-month loans similar to hard money or private money that's structured for 6 months. That says, hey Ryan, you can borrow this money, but it's for 6 months, and if you're not out in 6 months, there's gonna be repercussions to pay. So we have to hustle and rehab these houses, we have to hustle and get these squatters out, and we have to hustle and turn around and move these properties, or we have to turn around and refinance them at whatever the rate is at the given time. Being right now it's at 9.05, what's it gonna be in 6 months? I'm having to prepare for 10% interest when I used to prepare for 4. 6% more added on there is really taxing. So a lot of people don't really realize it's a silent tax. I mean, think about this. I mean, paying taxes or paying interest that goes and pays back to the Federal Reserve. What does the Federal Reserve do with our money? It probably goes over to Israel or even over into Palestine or both, Ukraine, government programs. I mean, think about all these things that we're spending our money on, our government's money on. It's got to be paid for somehow, some way. So what they're doing is they're raising interest rates along with your taxes that goes back to the Federal Reserve for them to go buy bombs and send them over with port blood on them or whatever they're doing over there in Israel. It's really crazy that we're funding this. And a lot of people don't realize that we're funding it. Your rent went up because the interest rate went up. Your rent went up because the taxes went up, because the value of everything went up because they printed too much money at a real cheap rate. So real estate investors that are, from their 20s to their 40s that really haven't ridden out bumpy rides, they're getting a really good taste of what's going on in this market because, for the last, 5 or 6 years, it's just been pretty smooth sales, and then all of a sudden, rates flew up. So now it's just time to buckle up. So some of the changes we made in our strategy, unfortunately, is we just got to pay less for our properties so we can afford our high prices that we're paying because of all this inflation. Tile went up, paper products went up, wood products went up, the lock sets have gone up. I mean, just everything has gone up, even down to the Home Depot calls. The technicians have gone up on their pricing because of inflation to keep up with it. Gas and diesel has flown up. We're having to buy deeper at a lesser rate because we're having to pay these higher rates of interest, having to pay, this higher inflation. And this really is a shit show if you really look at it. I've been reading some opinions that this could be a pretty big collapse, that Bidenomics doesn't make much sense. But I've also heard people that says the Bidenomics is making perfect sense. But it really just kind of depends on what you believe and what you see here. But a lot of my friends and a lot of my colleagues, they're just not agreeing with Bidenomics. I've got more mortgage consults calling me trying to sell me money than I've ever had in my life. Like, they're cold calling me, hey Ryan, you want to borrow some money? I'm like, no, I really don't want to borrow your money at your rate. Sorry, it's just a little too high for me. You know, at the end of the day, it's coming down to fees and ease, really. You know, if your fees are low or no and your ease is there, I'm borrowing money. But if you're coming in with these high points and these high fees and all this stuff, all this public money, and it's just like, dude, get out of here. I'm all about the private money. I've been borrowing a lot of money from private individuals that are recognized that, hey, look, Wall Street's a bumpy ride right now, and I kind of would rather invest in Ryan Jackson's shit boxes, you know? Why would you want to put your money over there in the stock market when you got a buffoon in office versus putting your money into a product like mine where you can collect interest, and guess who's paying the interest? Well, the tenant's paying the interest. We got renters in these houses. Kind of the other silent tax on this whole situation is the 13,000 people across the border every day. Who houses these people? People don't realize that supply and demand comes into place with a railroad collision with high interest rates. You're seeing the high interest rate and the influx of people kind of push this thing up still, and they're keeping raising the rates, raise the rate to slow it down. But can you offset 13,000 people that come across the southern border every single day with high interest rates? Can the high interest rates combat that? Well, what they could do is they could just close down the border, maybe build a wall, maybe do some more patrols. What if they did that? You know, what if less people cross the border illegally? Well, then we probably wouldn't have a run on housing as much. And if we didn't have a run on housing as much, then maybe we could lower the interest. You see what I'm saying? If we lower the interest and we fix the border problem, maybe we could get things affordable again. But nobody sees that. You know, who am I? I think 2024 is gonna be more of 2023. I feel like that we're just gonna continue to have these high interest rates. It is an election year, so naturally in election years you're probably going to see gas prices come down. You know, if gas prices come down, that might fuel, no pun intended, less of an inflation, I guess you'd say. If that fuel on the inflation fire is limited and brought down, you might start seeing them reduce interest rates just for the fact that, hey, it's an election year, let's go ahead and start lowering gas prices. You know, speaking of gas prices, one of the things that our cluster fucking chief Joe Biden did is he forgot to fill the oil reserves when it was down to nothing. Remember when the oil prices were at a rock bottom and people were even scared to buy them because they were collapsing? Our leader is so anti-oil, he didn't even fill up the fucking reserves. You know, 2024 being an election year, we got a new Speaker of the House. You know, the Trump train's still fueled well, and Mike Pence just dropped out of the race. You know, we're even seeing Democratic challengers now. This is something that we haven't really seen in politics in a while, is just voted out the Republican Speaker of the House, and now you're seeing RFK, and Biden's not even out there campaigning at all. This is interesting. To add in another caveat, the whole Middle East hates our guts right now. If the entire Middle East hates our guts right now, and we have a buffoon in the office that shut down all this drilling, and especially in like wildlife preserves, we're gonna slow down drilling and we're gonna piss everybody off in the Middle East because we're funding all this money to Israel. I really just don't know how this is gonna pan out. But I will tell you this, we have really shitty leadership in this country right now on both sides of the spectrum, on both sides of the aisles. They've been failing us a long time. We're spending money on dumb shit. We're sending bombs to people that don't deserve it. They probably need to fight their own wars. That's my opinion. So since we're sending all this money to all these other countries to go fight their wars, now everybody hates us. So I wouldn't be surprised if we even get into a nuclear war with one of these countries like China or Russia or even Iran if we don't slow our roll. That's my opinion. I hope you got a gun and I hope you're ready to fight.